I don't really know how to put into words how bizarre this weekend was for me. I mean, we go from a bank absolutely collapsing on Friday all the way to a stablecoin depegging to complete hysteria over the weekend, and people, including myself, saying that if the Federal Reserve or the administration doesn't come out and do something by Sunday night, then on Monday morning, people in the United States are going to be camped outside banks waiting for their cash. Absolutely a bizarre situation. Thankfully, the Federal Reserve did the absolute right thing, and they released a press release about how they were going to not bail out the banks. As Joe Biden said this morning, it's not going to affect taxpayers, which is just a load of baloney. But it's not technically a bailout. It's technically a backstop. Now, one thing that's important is that the Treasury Department came out and said that this situation is not 2008. And that is very important to touch on, because this situation is not 2008. The 2008 financial crisis was because of bad loans and bad debt. You know, people that didn't deserve mortgages getting mortgages, people that didn't deserve loans in general getting loans. No credit checks, no income checks. They were just giving out loans at way overvalued prices. There was nothing to back the money that was missing. Now, in this situation, it's slightly different, right? They bought bonds. The bonds are bad, but the bonds will mature, and maybe the government can fix things by the time those bonds mature. But this situation definitely is not 2008, so I think it was really good for them to come out and say it. But looking at the Federal Reserve's announcement here, when we take a look at it, this is what they released yesterday. And I'll tell you what, with all my history being alive, when a government organization comes out with something and the PDF attached is less than one page, I don't know if you ever, listen, let me put this in context. I don't know if you guys ever had older siblings growing up, but if you did, you probably played Madden. And if you played Madden, you were always losing to your older siblings. In the last part of the game, you always went shotgun and you always went Hail Mary, and you threw the ball the whole entire field and tried to make an amazing play to just save it all. That's what this seems like to me. I mean, for the Federal Reserve of the United States to come out and give a one-page bank term funding program outline on a Sunday, this is a Hail Mary shotgun situation. I mean, they took this and they understood the situation and said, listen, if we don't get out there and we don't do something today, securing people's mindsets on what the banking system is, then they're gonna run the banks. And they know, for people that don't know, they obviously know that these banks are operating on fractional reserves, 10% fractional reserves. And if people start showing up asking for money, there's gonna be real problems. Not at the Bank of America's, not at the JP Morgan's, but at the local regional credit unions and these little regional banks that aren't, you know, they don't have the cash that JP Morgan Chase and Wells Fargo and Bank of America do. And if these regional banks go out, it's the little person that's gonna get hurt. And that was really what was at risk here. Another really good thing is the fact that Silicon Valley Bank backs a lot of companies like Etsy and Gusto that are frameworks to the American, economy. And so a lot of people make money on Etsy. A lot of people do their payroll through Gusto. And there was about 360,000 employees that weren't going to get their payroll this week if the government didn't do something. So let's be clear that this isn't a bailout. At least that's not what we're calling it. We're calling it a backstop, because what the government is claiming is that the money is there just in assets, and it will take a little while to get the money out of those assets. So the government is essentially extending a line of credit to the bank and to the FDIC so that they can go and fund these depositors so that people can get their money back. Now, one thing I think is really important to talk about is really to put this situation in context and what this kind of was like for people. So there's this guy, Alexander Taranga, and he kind of tells his story in a unique way, and I think it's important sharing. So he talks about how he was banking with his personal banking and his personal savings and his two businesses at Silicon Valley Bank. Between 2013 and 2023, all was good. Then Thursday, 9 a.m., he's in a chat with about 200 tech founders, this little private room where they do the little pump and dump. No, I'm just kidding. There's 200 tech founders in this group, mainly in the Bay Area, and questions about Silicon Valley Bank start to pop up. 10 a.m., some suggest maybe getting their money out of SVB only for upside. There's no potential downside there. Well, obviously these guys are smart enough to know that's not the case. If 200 of the wealthiest people in Silicon Valley that own these tech startups decide, guys, let's go pull our money out of SVB, that is literally going to bank run. And anybody with common sense knows that that's what's going to happen. So for him to say no downside, little naive, but I understand. I would be fighting for myself in this situation also. So he read the messages in his bathroom break. He canceled all his meetings, and he calls his wife and tells her to wire all the personal money that they have to other bank accounts. Calls all his teams and tells them to do the same. All of them Oh, sorry. One of them was at the dentist and they had to stop the procedure and go home. Whatever, drama. So 11:10 happens. They can't get the money out of the accounts from the personal savings. They don't have other bank accounts to send this money to. So for one of the companies, the permissions are not set up to allow such a significant amount of money transfer for safety reasons and all this. So they only get half the money out. Blah, blah, blah. Moving on. His wife opens a new bank account. They get it open. They're signing documents without reading anything. They're just signing documents, opening bank accounts, transferring money, just signing off on wires, transferring money out. They only get half the money out for one of the businesses, and then they get the second half out for the first business, so the first company is safe. So they go through and they ask SVB to wire the rest of their money. He says he knows the CEO of SVB, so he decides to buy the dip. He looks at the dip. He looks at this chart, this death spiral, ladies and gentlemen. This chart is bleeding to death. And my guy, while he's trying to transfer his personal savings out, he decides, I'm gonna buy the dip. Crazy, crazy fucking guy. This guy's out of his trees. He's nuts. So the second wire for the second company hasn't cleared yet, and they have not gotten their personal savings out of bed. Out of the bank. He goes to bed 2 a.m. 7 a.m. he wakes up, nothing. SVB stock, surprisingly, not surprisingly, is down 60% overnight. So that wasn't a very good call on his part. He lost his shirt. So he cancels all his meetings to focus on this. And then he learns that SVB is now controlled by the United States government. The FDIC has taken control, and the shares he bought the day before are completely worthless. Yeah, it's clear to say, buddy, you made a mistake. I do feel for this guy, and I think it's really sad to think that, because he talks about blaming himself and then kind of going back to his normal life and really worrying about how he's going to come up with the money to pay his payroll. And that was the real fear here, is there's a lot of companies that are in Alexander's exact situation where they had all their money in this bank foolishly or unfoolishly, however you look at it. I think it's foolish to put all your money in one place. But, he had all his money in this one place, and this means that payroll isn't going to happen. People aren't going to get paid. People are going to lose their jobs. And less importantly to him, the way he writes it, his entire life savings, what he's worked up for, is completely gone. Now, it's nice that the Federal Reserve came out and said, listen, guys, this is not 2008, and we're going to backstop these guys, and we're going to give everyone their money back. Now, it's still going to be a lengthy process for the people that had their money in there. It's not going to happen overnight. They're not going to get their money back right away. But you have to hope that they're going to be able to get their money back. Now, on better news, Binance, which set together a $1 billion recovery fund a few months back when the market was at the absolute bottom, Binance bought the dip. Okay, so Binance bought BTC, ETH, and BNB, which is their native token if you don't know that. Bitcoin, Ethereum, and BNB, right? And so they bought the dip. And so as you can see here, this is on the 1 hour chart. Bitcoin just absolutely went full green D mode. Things started mooning from 20K all the way up to $22,500. Absolutely incredible. I'm expecting it to pull back a little bit, and then we'll see. There's got to be a lot of demand. We're above the moving average now. Even if we look on the daily, if I pull up the daily chart, you can see that we retested that moving average like crazy. This is a breakdown zone or a breakout zone. When candles close below it, it's likely to fall to the next zone. So as you can see here, this is the next breakdown zone. So it used this as a support and then came up and closed above the breakout zone. So the next zone I would expect to go to is 23,000, and this is where we're going to really start to see a test to see if we can break back into this channel. Now, if we can break back into this channel, in my opinion, it is really, really bullish, because what we're looking at is a retest on the overall, what used to be the resistance would now become the support, right? So as we look at it, we're looking at a new support line here instead of a resistance. So what the candles used to be bouncing off of, it's now going to be what they used to bounce against is now going to be what they bounce off of, right? And so as we look at it, we see that we are above the moving average, this cloud here that you see. So if you guys don't know, this is Lux Algo. This is what I use. The link is always down in the description. Obviously, if you guys sign up for it, just please use my affiliate code. If you pay for the year, you can get it with crypto. But it does all the technical analysis for you. Regardless, love this. I've been using it for almost 2 years. I couldn't really talk about it for 2 years, but now I can. So yeah, cool. And as you can see, Bitcoin is looking super, super promising. Bitcoin's looking like it could absolutely send here. And when I look over at Watcher Guru, there's a couple things to point out that Watcher Guru's talked about. One of them being, I'll drag this over really quick. One of them being the fact that Coinbase says that it had $240 million in Silicon Valley Bank, which is unbelievable to think about. The fact that Coinbase would leave $240 million in a single bank is so foolish, it's not even funny. But this paves the way to the conversation of there's very few options for crypto exchanges for what banks to use. There was Silvergate's gone, right? And so it's shocking to me that they would leave 240 million in, but the US government is not giving a clear path for crypto exchanges on what banks they can and cannot use. So obviously moving forward, it would be really nice if a company like Binance would open a bank so that companies like Coinbase and Crypto.com and, well, not FTX, but everybody could go and use, you know, this crypto bank, so to say. And that's kind of what Silvergate was, but Silvergate isn't gonna be the one to be that anymore. That being said, they had $240 million in there. They've claimed that they're gonna be able to get it all back out. If you haven't seen USDC's completely repegged, I believe. So I think last I looked, it was at 99 cents. So USDC's back. Last we had a conversation, it was at 80 cents. So whoever bought that dip, congratulations. You made a quick 20%. So good stuff. Excited to see what happens over the next few days. I think that my humble, not financial advice prediction is that anybody that bought BTC at 20K got a severe discount. Anyone that bought it down here at 16K, you're actually an absolute Chad, and you have balls of steel, because when everyone else was saying the bottom's gonna fall out, it's gonna go to 0, it's gonna go to 10K, those people had the absolute just balls to buy it down here and say, you know what, no, 16K BTC is a good deal no matter what way you look at it. So let's see. We'll see where the market takes us. Regardless, the banks aren't gonna collapse today. I'm right outside of a bank, right? Like there's 2 banks right here, right outside my window. I don't see anybody with tents. And I was expecting to see people lined up outside these banks this morning, but the Federal Reserve came out and did the right thing. The only thing that I truly believe would have fixed this situation, and now my heart just goes out to the founders and the people that are running these companies, that, you know, they have to come up with millions of dollars to make payroll today, tomorrow, the next day, leading into the rest of this week, because that payroll money isn't there. Just because the Federal Reserve came out and said, hey, we're gonna put a backstop in place, this is just to stop the panic at all the other banks, right? SVB is still a big deal and they still have big problems, and the people that had the money in there still are gonna have to wait a long time to get that money out. So a lot of emergency funding going on. I saw Jack Altman, Sam Altman's brother, who's the CEO of OpenAI, ChatGPT. Jack said his brother Sam was giving out millions of dollars to tech founders on just merely a handshake, with no contracts, no nothing, giving people millions of dollars so that they can go out and pay their payroll. Now, that's all courageous and nice and fun, but in business, that type of stuff, when people are usually that philanthropic and forthcoming with their funds, it means scary things. So we'll see. I mean, I think that the banks are secure in the United States. I personally don't leave too much money in a bank because I don't know, it's my personal preference. I like blockchain. Like CZ said the other day, it's funny to watch banks, crypto banks especially, failing around the world, but blockchain is still intact. And for the people curious, I've seen a lot of threads on Twitter, where do I put my money if banks are failing and the US dollar, inflation, blah, blah, blah. Bitcoin's volatile. Well, as more money flows into Bitcoin, Bitcoin becomes less volatile, right? We're only at a $1 trillion market cap in BTC. And so the sky's and crypto, sorry, BTC is like 350 billion. The sky's the limit with crypto. And so I think that we're just seeing the beginning, and we're going to see a lot of people that move their money into cryptocurrency, because this is the exact reason that crypto was invented in the first place. Bitcoin was invented in the first place. I mean, Bitcoin came out in 2009, right after the 2008 financial crisis, because people wanted a currency that was non-custodial that the US government couldn't put their thumb down on and completely destroy overnight. And that's exactly what BTC is. It's a hedge against inflation. It is digital gold, in my personal professional opinion. Ladies and gentlemen, nothing you hear on this channel is financial advice, but I do recommend that you join the Coin Launch Lounge and start catching up on the AMAs. Thank you everybody for coming out. Links are always down in the description. Support the channel by going and checking out Lux Algo. Just click on the link and go scroll around, check it out. Join the crypto community. Come join us while we go live down there. We go live down there a couple days a week, so a lot of fun. You can learn a lot. And I also have a DeFi course coming up, so down in the description you guys can pre-enroll for the DeFi course. Thank you so much for watching this video. Peace!